All right, here's when we can finally expect the missing data to start rolling back in if the government shutdown actually ends. Potentially, we'll start seeing some of those economic reports that have been frozen for weeks, like jobs data, inflation reads, GDP, retail sales, all of those numbers that we watch to see how the real economy is actually holding up. And all of that stuff is what the Fed needs to see before their December 9th and 10th meeting, where they'll start that 2-day meeting and then decide what they're going to do with rates. But this is where there's that problem with that data. So when that data drops, when it comes out, it's not going to be very clean. It's going to be lagged, estimated, and possibly way off of the mark. So in a sense, the Fed's next move could literally be based on half-finished information, and that's risky. So let's break all of this down. When the data is expected, what shape it's in, and what is it showing us so far? And how all of this ties into the broader picture for jobs, inflation, small business health, and where the Fed might actually go next. So assuming we get the green light this week and the government reopens, here is what Morgan Stanley thinks as far as the schedule, what that timeline will look like. So we'll start off with November 19th. We'll get that delayed September jobs report. A lot of people are waiting on this. Then the next day, we'll get September retail sales and PPI data. Third quarter GDP on the 5th. And then December 8th. This one's a big one. This is before the Fed. This is important because they'll consider this if they get it, and we're cutting it close with December 8th because the meeting starts on the 9th. But this will be one day before the Fed meets. And that last one, that October jobs report, that'll either confirm the labor market's slowing or show that it's hanging on better than we think so. And then the Fed will be able to, just in time, get to put their eye on it, see what's going on, and then adjust their tone before the meeting. But the bigger issue here is the accuracy of these numbers. October's numbers are expected to be pretty messy. The Bureau of Labor Statistics wasn't at work to collect prices, surveys, calls. It was all shut down. So for October, November, they'll likely rely more on company filings, automated data, and estimates, which means the inflation or jobs reports, they could be directionally right, but statistically off. So we'll get these headlines, but not necessarily the truth out of this data that we're expecting to get. And it's at such an important time. And that truth is starting to show some cracks of its own. So what Goldman Sachs says is that U.S. non-farm payrolls likely fell by 50,000 in October, which would be the sharpest drop since 2020. They've been tracking labor tightness, job openings, layoffs, and all three are pointing in the wrong direction. We don't want to be going this way. And then meanwhile, ADP reported that the U.S. shed an average of 11,250 private sector jobs per week during the 4 weeks ending October 25th. That's not seasonal noise, that's real weakness. What's even worse is ADP's earlier October report, the one that showed 42,000 new private jobs, now looks front-loaded. So most of those hires happened early in the month and faded fast by the second half. So it's like the job market had a pulse early October and then it flatlined halfway through. So that means the December 8th jobs report, that one that lands right before the Fed meeting, assuming they're able to crunch in enough time to get it knocked out because the government's not even open yet. So these are made up timelines. It's a complete guess. It could be easily the single most important piece of data release for the entire quarter for both the public-facing crowd and the Federal Reserve. Because if that number confirms the slowdown, the Fed's entire tone, it could change overnight. So while Wall Street's watching rates, Main Street's the one feeling the squeeze. The NFIB, this is the Small Business Optimism Index. It slipped to 98.2 in October. It's still above its 52-year average, but trending down. It was barely a move down, though. Really not even, I almost didn't even cover this today. And here's what's inside the report that really ended up mattering. 32% of owners still have job openings they can't fill around the country. 27% said labor quality is their number one problem. 13% reported stronger sales. Minus 13% stronger sales, so down 13% from the previous month. Down 25% said profits improved. So it's not that the small businesses are necessarily collapsing, it's that they're running harder just to stand still. Over 60% said supply chain issues are still hitting them, and even though costs haven't dropped, fewer owners are raising prices. Only 21% raised their prices in October, down from September. And that's actually a signal that inflation pressure, well, it's easing, but not for a good reason. And it's because demand is softening and consumers are tapped out. So that's not the ideal situation. And then if that trend continues, say into the holidays, where Q4 could come and be much weaker than anybody's forecasting. And we were just talking about how for Q4, that November, December stretch, all of the holiday season, for 60% of businesses, I believe, it makes up like 50% of their business of the year in those holiday seasons, depending on what the company is. Here, let me verify that real quick. So that was the Constant Contacts Small Business Now Holiday Report. And I got it loading right here. For 60% of small businesses, the holiday sales seasons account for up to 50% of annual sales. So I just had to make sure I was right on that one. Now, on the surface, markets are really loving all the bad news is good news setup. Bad news, all right, that means the Fed's got to cut rates here pretty soon. That's good news, everybody. But today's session, we saw the Dow hit an all-time high. The S&P 500 inched up, and tech shares dragged the NASDAQ lower today. So we're seeing some rotation going on, and the Dow is full of these safety stocks. That'll be your industrials, your banks, consumer staples, those value companies, the big boring ones that pay dividends and don't move 10% in a single day. At least some of them. And while investors are piling into the Dow, it's usually not because they're chasing risk, it's because they're bracing for volatility. So while headlines are celebrating new records for the Dow, underneath it looks more like a setup for portfolio defense. Now, this is where things get pretty interesting. Statistically, November and December are the strongest 2-month stretch for the stock market. Since 1896, the Dow's risen 77% of the time during this window, and that's usually what they'd call the Santa Claus rally. The average gain is usually 1.44% compared to the 0.16% in all of the other 2-week periods. So the Santa Claus effect, it's real, and it's one of the few seasonal trends that stood the test of time. So everybody's wondering, well, this year we'll see that. Now combine that with the possibility of data finally coming back online, a market that's already priced in a lot of bad news, and a hope for rate cuts all through 2026. And that's the recipe for one more push into year end. So here's where we are right now, everybody. The government might reopen by the end of this week. We'll see on this one. But even if it does, the backlog will take weeks to clear out with all of the data that we're waiting on. October's data will likely be messy and full of estimates. The labor market's softening faster than many people realize, and especially in small business payrolls. Inflation's still too high to ignore, but too uncertain to confidently fight. And the market's betting on this soft landing while the Fed's still not sure that the runway's even clear yet. And Wall Street's partying at record highs, Main Street's tightening belts, and the Fed, they're about to make one of their biggest decisions of the year with fogged up instruments. So we got a little under a month to kind of prepare and figure out what the heck's going on, but the first clean test will come on December 8th with that jobs report.